I'm going to show you the one rule Jesse Livermore never wrote on paper, but lived by in the tape and unseen compass that turned chaos into clarity and made the market speak before it moved. If you've ever stared at a chart and felt it staring back, you know the feeling, the hum before the storm, the breath the market takes right before it breaks. Traders call it intuition. Livermore called it line of least resistance. I call it the hidden rule, the discipline to let the market reveal its own intention, and to act only when price, time, and behavior line up like tumblers in a lock. Before we go any deeper, what would you do in that moment when everything looks uncertain, but feels inevitable? Comment your thoughts below. I'm not here to sell you mysticism. I'm here to narrate the pattern of cause and effect the way Livermore trained himself to see it. Not with indicators, not with noise, but with the choreography of buyers and sellers when the crowd leans too far to one side. He believed every major move begins long before it shows on the front page, born first in the tape, then in the volume, and only finally in the headlines. The hidden rule is the discipline to wait for that sequence, to read the language without translating it into hopes or fears. Picture a trading day that looks like any other. The open is ordinary. Headlines are dull. But the market isn't a headline machine. It's a pressure system. Somewhere beneath your watch list, a stock stops going down on bad news. Rallies no longer fade. Pullbacks refuse to break. Volume doesn't explode, it thickens. The tape starts to feel heavy in one direction and light in the other. Livermore would lean forward then, not to predict, but to listen. Because the hidden rule isn't forecasting, it's recognition. Recognition that accumulation leaves fingerprints, that distribution exhales in a particular rhythm, and that the job of a trader is to be a detective, not a prophet. I learned the hard way that you can't force this. You can't build a fortune on impatience. Livermore wrote about sitting tight because he knew sitting was an action when the conditions were right. But he also warned that sitting without a reason is just waiting to be punished. The hidden rule draws the line between those two. It tells you when to stock, when to strike, and when to vanish. It is the rule that explains why he could pyramid a winner but cut a loser with surgical speed. Because he wasn't trading opinions. He was trading behavior. He was trading the market's own confession. In this film, I'm going to pull apart the psychology that hides inside that rule. We'll walk into the inner chamber where conviction is forged. The paradox of wanting certainty in a game that rewards adaptability. The trap of trading your beliefs instead of the market's beliefs. The discipline of waiting for a pivot that the crowd can't yet name. We'll examine the pattern of a major move the way a pilot studies wind, not as an obstacle, but as an instrument. And I'll show you how to turn Livermore's old world tape reading into modern execution. Whether you trade daily breakouts or multi-week swings, here's how we'll do it. First, we'll confront the inner conflict every trader knows, but few can articulate: the market paradox. That makes smart people do foolish things. Then we'll unmask the psychological trap that chews through accounts faster than bad entries. The urge to be early enough to be right, and early enough to be wrong. From there, we'll bring in Livermore's perspective, his rules, his posture, his language. We'll ground it in a real-world story, a moment when price told the truth before the news did. We'll step through the emotional low point, then rise into the breakthrough lesson, map it to modern tactics, and finish with a step-by-step implementation you can print, memorize, and use. Livermore once said, "It was never my thinking that made the big money. It was always my sitting." The hidden rule explains when to sit, what to sit on, and why sitting is not passivity, it's strategic tension. It's the bow pulled back before the arrow flies. And that's where we begin. In the quiet, where the market turns the lights off and whispers. If you can hear that whisper, you don't need to predict, you only need to prepare. In the next section, I'll open the door to that tension and show you the paradox that quietly governs every major move you've ever missed or caught. I've learned that the market's cruelest joke is simple. The more I crave certainty, the more the market withholds it. The more I accept uncertainty, the more the market reveals its plan. That's the paradox that stalks every trading day. I wake up wanting confirmation, wanting the world to print in bold letters, "Today is the day." But this game doesn't reward the need for comfort. It rewards the capacity to hold tension without flinching. Livermore understood that better than anyone. He moved like a hunter who respected the distance between spotting tracks and seeing the animal. And he treated that distance as sacred. In that gap, weak traders rush to be first. Strong traders slow down until price confirms what their preparation suspected. I remember sitting in front of the screens on a day when everything lined up: news momentum, a level under siege, options flow screaming in one direction. My pulse wanted to front run the breakthrough, to buy the story, not the tape. That's when the paradox grips me. If I'm early and right, I look like a genius. If I'm early and wrong, I bleed twice, once in capital, once in confidence. The market doesn't punish my entries as much as it punishes my impatience. Livermore called it the itching to trade. It's the disease of movement for movement's sake. The paradox whispers, do less, see more. What makes the paradox brutal is that the best trades feel the worst at first. When a stock builds pressure beneath a well-watched level, the crowd imagines a clean, cinematic breakout. In reality, the market prefers ambiguity. It fakes, it finds, it pauses in a maddening drift that asks, do you trust your read more than you fear embarrassment? I've come to see that hesitation not as a flaw in the setup, but as the proving ground of the trader. The market's job is to tempt me into trading my fear. My job is to trade my plan. Livermore learned to treat uncertainty as raw material. He didn't need absolute proof. He needed actionable probability aligned with behavior. He read that alignment in how price fought or yielded at key points. He noticed when bad news stopped pushing a stock lower, or when good news stopped lifting it. That's not mysticism. That's crowd psychology hardening into structure. The paradox says, big money hides in small differences between nearly and actually, between should and did, between belief and behavior. The crowd trades what it believes. Livermore traded what the tape did. When I respect that, the inner conflict softens. My checklist changes from will this break out to is the path of least resistance now visible? I ask whether the market just proved the side I'm considering. Did it reject the other side with authority? Did it hold a critical level under pressure? Did volume support the move without becoming climactic too soon? And equally, I ask whether I'm forcing the narrative because I want to be the hero who called it first. That ego hunger is the paradox's accomplice. The market doesn't pay for originality. It pays for alignment. There's a quiet way to live with this. I scale my conviction with the tape, not with my excitement. I let the market earn my size, tick by tick. The way Livermore pyramided only after a move proved itself. The paradox resolves itself not by eliminating uncertainty, but by pricing it. Risk becomes tuition, not a verdict. If I'm wrong, the tape tells me quickly. If I'm right, the tape invites me to add. It's a relationship, not a guess. Before we move on, I want to ask you, when you feel that tightening coil clear level, mixed signals, rising urge, what do you do? Do you press early to win the title of prophet, or do you wait for the market to tip its hand? Drop your answer in the comments and tell me how you navigate that moment. Because in the next section, I'm going to dissect the psychological trap that springs from this paradox, the one that empties accounts quietly, the compulsion to be first to the move, and how that urge turns winners into whipsaws. We're going to slow it down, slice it open, and name each piece so you can see it coming the next time the tape starts whispering. The moment I crave the most, when price hovers just beneath a key level, and every cell in my body wants to be early, that's where the trap lives. It doesn't announce itself with sirens. It arrives dressed as professional intuition, as if my eagerness is the same thing as my edge. I've learned to name it premature conviction. It's the quiet agreement I make with my ego to trade what I want to see, instead of what the market is actually doing. That agreement is costly, because once I take the early entry, my mind turns defense attorney. I stop reading. I start justifying. The chart becomes propaganda for my position. Livermore warned about this in his own way. He said there's nothing new on Wall Street because human nature never changes. The trap isn't a pattern on the screen. It's a pattern in me. It shows up as anchoring, fixating on the first price I paid and making every subsequent decision about protecting that choice. It shows up as confirmation seeking, hunting for any tick, any tweet, any candle that supports my early leap. Most dangerously, it shows up as refusal to recognize the line of least resistance when it flips against me. I'm not trading the tape anymore. I'm trading my memory of a setup that could have been. Here's the anatomy of the trap. Step 1. A clean narrative forms, earnings ahead, sector tailwind. A major resistance tested 5 times. Step 2. I imagine the glory of catching the first thrust through the level. Step 3. I enter just before the market resolves, because being first promises the biggest reward. Step 4. The market does what it often does, tests both sides, shakes the eager, and decides on its own schedule. I'm early, so I'm vulnerable. Every shakeout now feels personal. I widen my stop just this once. I tell myself I'm thinking long-term when really I'm refusing to admit I was too soon. What started as a clever head start becomes a slow bleed of time, energy, and emotional capital. Not only am I wrong, I'm now too exhausted to act when the real move finally comes. Livermore's antidote wasn't a magical indicator. It was a way of being. He demanded that price prove its intent before he would risk serious capital. That didn't make him late. It made him aligned. He wrote about the first loss being the best loss, not because it feels good, but because it protects judgment. The trap corrodes that judgment. It convinces me to average down for comfort, not for strategy. to add to a loser because I want to repair feelings, not because the tape changed. He would scale only when the market marched in his direction, with authority each ed validated by new evidence, not old hopes. Modern markets amplify the trap. Algorithms create false urgency. Social feeds reward hot takes, not patient reads. You can stream fear and greed in high definition. The result is a mind that trades the tempo of information rather than the structure of price. But the structure is still there. When a stock refuses to go lower on bearish headlines, when pullbacks get bought faster and sell-offs get shallower, when volume expands on upswings and dries on dips, that structure whispering. The trap is mistaking noise for signal before those behaviors align. I've had to build rituals to keep myself honest. Before taking a breakout, I ask, has the market already rejected the downside cleanly? Is the consolidation tight, with failed breakdowns absorbed quickly? Is volume supportive without being climactic? If I can't answer yes to at least two of these, I don't have alignment, I have anticipation wearing a mask. And if I do take a starter position, I size it to survive ambiguity. I let the market earn my size with confirmation, not with my excitement. Here's the paradox within the trap. The best way to be early enough is to be willing to be late. When price confirms, I may not catch the first tick, but I catch the trend. And that's where the money lives. Livermore's greatest trades weren't about timing a single print. They were about riding the line of least resistance once it was found. The trap tells me to guess the destination. The rule reminds me to follow the road. I want to hear from you. When was the last time you took a trade too early, and then watched the real move happen without you? Share the moment in the comments. What did it teach you about your process? In the next section, I'll step into Livermore's perspective directly, how he framed this temptation, the specific rules he used to dodge it, and the mental posture he adopted before, during, and after a move. We'll translate those principles into a lens you can hold over any chart and see what he saw. Livermore's perspective on the situation. When I put on Livermore's eyes, the market becomes less of a battlefield and more of a courtroom. Price is the witness, volume is the voice, time is the cross-examination. My job isn't to argue. It's to listen until testimony turns into conviction. Livermore called this the line of least resistance, and he treated it as a living current. He didn't predict where the river should flow. He looked for where it already flowed in, then he aligned himself with that force, accepting that the river sometimes loops, eddies, and fakes before it commits. His discipline starts with a moral stance. The market is never wrong, opinions often are. That single belief dissolves defensiveness. If I'm wrong, the tape simply told the truth sooner than I did. He probed, not pounced. Take a small test position at a pivotal point, then force the market to validate that decision by moving in his favor. If it didn't, he backed out without self-judgment. The first loss was the best loss because it purchased clarity and preserved mental capital. He wouldn't average down a loser. He would abandon it. But when a trade worked, he would do the opposite of most. He added, and added again, pyramiding only in the direction of progress, each unit paid for by prior profits. Livermore understood the time element. He cared how fast or slow the market responded to his position. If he was right, he expected to be right quickly, not eventually. A setup that should go but doesn't is information. Stagnation near a breakout is not benign. It's a sign that resistance remains formidable, or that smart money is offloading to eager hands. In contrast, when the line of least resistance truly flips, you feel that the market rejects the other side with decisiveness. Rallies become stairsteps, not leaps. Pullbacks are brief, not theatrical. You would wait for that change of character, then sit tight. Not in laziness, but in obedience to the new dominant force. He was ruthless about solitude. Tips, chatter, consensus, these were contaminants. The tape was his confidant, and its language was behavior. How price handled bad news. How it acted at previous swing highs. Whether volume swelled when it should and dried up when it must. He loved pivotal points, those moments when the market revealed a new intention. By breaking a critical level, or by refusing, repeatedly, to be pushed back below it. At a true pivot, he pressed. At a counterfeit pivot, he left. Emotionally, he practiced conditional confidence. He was confident in his process, conditional on the tape continuing to agree. That meant he didn't believe in the stock. He believed in the trend given its current testimony. The instant the testimony changed, he changed. That flexibility is not fickleness. It is fidelity to the rule that the market leads and the trader follows. He'd say, in so many words, that being right is not a personality trait. It's a temporary alignment. From this posture, risk management becomes almost elegant. Stops aren't fences for fear, they're instruments that measure whether the river still flows the way I thought. If stopped, I haven't failed. I've been informed. If not stopped and a move expands, I'm invited to increase risk from strength, not from hope. That's the geometric nature of his pyramiding units stacked only as the trend proves. It can carry them. Contrast that with the linear stubbornness of averaging down, adding a weight to his struggling raft. In a rising current, Livermore's perspective also demystifies patience. Waiting wasn't passive for him. It was active surveillance. He watched for test pullbacks that should have broken but didn't. Rallies that should have failed but held. Each test passed upgraded his conviction. Each test failed downgraded it. The decision tree was simple, but the discipline to follow it was rare. He wrote of the big money being in the big swing. Not in the scalp, yet he took care to step aside when the market drifted without edge. No trade was a position to. Neutrality preserved optionality. All of this rolls up into the hidden rule as I experience it today. Let the market declare its intent at a pivotal point. Risk small until it does. Then risk bigger only in harmony with the newfound current. Do not rescue a thesis with more capital. Rescue your capital with better behavior. Sit tight not because you're stubborn, but because the river is moving and your raft is centered. And when the current shifts, admit it, exit, and begin listening again. I want to hear your take. Which of Livermore's principles bites you the hardest, cutting losses quickly, sitting tight when bored, or adding to winners without apology? Tell me in the comments which rule you struggle with and why. Next, I'll bring this perspective to life with a real-world moment, no hindsight heroics. Just the anatomy of a move that telegraphed itself in behavior long before the narrative caught up. We'll watch how the current formed, how the test spoke, and how a trader aligned with the river instead of wrestling it. There was a moment in 2020 that reminded me exactly how Livermore's hidden rule still breathes in modern markets. I was watching a well-known tech stock, one that had already run hard. During the early months of lockdown trading, the story was everywhere. Analysts couldn't stop calling it the next trillion-dollar company. It had momentum, hype, and narrative. But what caught my attention wasn't the story, it was the pause. For 2 weeks, the stock stopped advancing. The news was still bullish, yet the price began moving sideways in tight ranges. Volume contracted. Retail traders flooded message boards with disbelief. Why isn't it exploding? That's the first tell when emotion expands but range compresses. The market is preparing something. The river is curling back before the next current. I watched for signs of accumulation, small volume pullbacks being absorbed immediately. A pattern Livermore described as stock in strong hands. He used to say, when you see a stock act stronger than the market on bad days and weaker on good days, take note. That's exactly what I saw. On days when indices dipped, the stock refused to drop meaningfully. On strong days, it lagged just slightly enough to confuse those chasing momentum. It was absorbing supply, not expressing demand. Then came the pivot. One morning, pre-market headlines screamed about regulatory concerns. Yet the stock opened slightly lower and reversed upward within minutes. That behavior, resilience against bad news, is Livermore's fingerprint. He called it the change in character. I entered a starter position with risk defined under the week's low, expecting the tape to prove itself. It did. Volume expanded just enough to confirm renewed sponsorship, but not enough to mark exhaustion. The move that followed wasn't a rocket, it was a tide. Each dip was shallower, each pause shorter, each close firmer. And here's where Livermore's discipline mattered most. I didn't add immediately. I waited for the market to earn my confidence. When the first pullback failed to break prior lows and volume contracted again, I added. My risk was already funded by progress. That's how Livermore built his pyramid's profits, financing exposure, not ego. Within weeks, the stock had moved nearly 30% higher. Then came the test of conviction. News broke about profit taking from large funds, and the stock dipped sharply one morning. I remembered Livermore's warning. A man must study general conditions to size them so as to be able to anticipate probabilities. The overall tape still showed strength. Indices were supportive, and volume on the dip was lighter than on the rise. Instead of panic selling, I watched. The stock held its prior breakout zone, closed near its high, and began rising again. That was the moment the hidden rule revealed itself once more. The market had declared its intention through behavior long before analysts changed their tone. The test was psychological, not technical. Could I hold the position without needing reassurance from outside narratives? Could I trust the structure more than the chatter? That's the exact battle Livermore faced in every great campaign, the pull between clarity and comfort. What I learned from that trade wasn't the profit. It was the patience to wait for the character change, the courage to hold through noise, and the humility to let the market do the talking. That patience became my compass, and it reminded me that great trades don't begin when we click buy. They begin when we recognize why the crowd is wrong and have the discipline to wait until price confirms it. From this point forward, Livermore's story always deepens. Every strong campaign is followed by turbulence, a test of belief, composure, and adaptability. In the next section, we'll walk through that moment, the emotional low point, the place where Livermore's detachment from ego became his greatest weapon, and how that mental collapse many traders experience is not failure, but the threshold to transformation. Emotional low point or turning point, the high of alignment never lasts unchallenged. After the advance, after my careful ads, came the stall, the kind of stall that doesn't announce itself as a top, only as fatigue. Candles narrowed, volume thinned, headlines cycled between euphoria and faint warnings about overheating. And I felt a tremor I've learned to respect, the fear of giving back paper gains. That fear is quiet at first. It doesn't shout, it whispers, and the whisper says, lock it now. You were lucky. On the screen, nothing catastrophic happened, no gap down, no regulatory bombshell. Just time doing what it does best to traders, eroding nerve. I caught myself staring not at the chart, but at the P and L column, as if the numbers there knew anything about the future. The market paused, but my mind sprinted. And in that sprint, I felt the gravitational pull of bad ideas, the urge to micromanage every tick, and the urge to rewrite my plan mid-trade. To soothe emotion, this is where Livermore's shadow stood behind me. He had written of the greatest enemy, not Wall Street, not the insiders, but the trader himself. He described how the crowd craves finality in a probabilistic world, and how the need to be reassured every hour is what leads a man to sell his best positions on the first sign of boredom. He warned that markets correct into currencies, price, and time, and that time corrections are the crueler because they look harmless while they hollow you out. I watched my stock oscillate within a tight band for days, then weeks. Each dip to the lower edge of the range felt like a personal insult to the earlier strength I'd read so clearly. Each recovery felt like a half-hearted apology. My conviction ebbed and flowed with those inches, and I hated it. That's when I realized the tape hadn't contradicted me. I had drifted from the rule that got me here. Align exposure with behavior, not with feeling. The behavior still said higher lows, respectful pullbacks, no heavy distribution, just digestion. The feeling said, you've overstayed the party. I stepped away from the screen and performed a ritual I've used since learning it the hard way. I rewrote the campaign on paper as if it were someone else's trade. Entry, ads, reasons, levels that would disprove the thesis, not inconvenience it. I asked the key Livermore question: if I had no position, and I saw this exact structure, now, would I want to be long, flat, or short? The answer embarrassed me. I would still want to be long, with the same stop, and I would probably look to add on a clean range break. That clarity didn't silence fear, but it fenced it. The next day, the market obliged with more tedium, no range break, no disaster, just a relentless test of patience. That's when the real turning point occurred, not on the chart, but in my posture. I moved my attention from outcome to process. I set alerts above and below the structure and forced myself to walk away. I refused to scroll social commentary, refused to read tea leaves and 5-minute candles, refused to treat boredom as risk. If the lower alert hit with volume, the market would have spoken and I'd exit. If the upper alert triggered with expanding participation, I'd add according to plan. Until then, neutrality inside the range was the discipline Livermore called this sitting tight, but what he really meant was sitting tight in context. It's not stubbornness, it's keeping faith with the evidence you pledged to honor. He also wrote that the big money is in the big swing, yet most traders spend their strength on the little fights between. That's exactly the trap I was escaping. The compulsion to win every small argument with the tape, and in doing so, lose the war. When the break finally came, it didn't feel like fireworks, it felt like exhale. Price stepped above the ceiling, volume swelled just enough to confirm sponsorship, and the pullback that followed held precisely where it should. I added a final unit. The trade resumed its tide. And the strange thing, the emotional low point had taught me more than the breakout itself, because the lesson wasn't about being right. It was about staying aligned long enough to let right pay. Tell me something. Honestly, when boredom gnaws at your best positions, do you cut, hedge, or sit? Drop a comment with your default move and why you think you do it. From here, the path was clear to Livermore's crystallized wisdom, the rule that transforms this emotional valley into a method, the breakthrough principle that decides when to wait, when to add, and when to be merciless. In the next section, I'll lay out that rule in his spirit and show how it converts patience into progress, without romanticizing hope. Livermore's breakthrough was not about predicting direction, it was about mastering timing. Through confirmation, his hidden rule, as I've come to interpret it, was simple in words but brutal in execution. Trade only when the market proves your suspicion by its own behavior. He believed the market always gave subtle proof before a major move. The task was not to guess, but to wait until proof and price moved together. That rule separated him from the crowd. While others argued with charts, he demanded evidence in the tape. He'd wait for a pivotal point, a moment when resistance no longer resisted, when support no longer supported, when bad news failed to drive a stock lower. That was his signal. And once he saw it, he acted without hesitation. All through time, he said, people have basically acted and reacted the same way in the market. Because of human nature, the rule's power lies in its universality. Crowd behavior is timeless, and so are its tells. To apply it, he used calibrations: price action and time reaction. Price told him where. Time told him when. If the expected movement didn't materialize soon after his entry, that in itself was information. A stock that should go but doesn't is guilty until proven innocent. He cut quickly and moved on. Conversely, when he was right fast. That speed validated the setup. Then came the pyramiding, the expansion of size only when the market demonstrated that. His line of least resistance continued to hold. Each new position had to justify itself by making the previous one safe. Livermore's discipline extended beyond charts. It was psychological hygiene. He trained himself to not need to trade every day. He wrote that waiting for the right setup was the hardest thing he ever did, and the most profitable. The market rewards boredom resistance. His rule forced him to conserve both money and willpower for the moments that mattered. That's the essence of timing, not foretelling, but filtering. What strikes me most is how this principle translates seamlessly into modern markets, where screens never sleep. Today, we drown in data. Yet the same rule applies. Look for behavior that contradicts the crowd's assumption. When sentiment hits an extreme, when everyone is sure of one direction, and the market refuses to follow, that's the whisper. Livermore would call it the change in character. Modern traders see it in liquidity traps, in options skew, in tape that shrugs off news. It's still the same conversation, just with faster syntax. His rule also reshaped how he handled loss. Losing wasn't failure. Staying wrong was. He'd rather be out of a trade wishing he were in, than in a trade wishing he were out. That mindset disarmed fear because it reframed exits as decisions, not defeats. Each stop honored the rule by acknowledging that the tape had withdrawn confirmation. Pride never entered the equation. Survival did. Livermore's genius was realizing that consistency isn't about constant action, it's about conditional action. He didn't need to predict every turn. He needed to be synchronized with the big ones. His rule built the rhythm: small test, quick cut, strong confirmation, pyramiding, patience. No guesses, no rescues. When I apply this today, I treat the market like a dialogue. My setup is the question. Price is the answer. If the answer is unclear, I don't ask louder by adding size, I ask smarter by waiting longer. The rule turns trading into observation punctuated by conviction. Most days are spent observing, a few acting. That ratio is what keeps capital and composure intact. Livermore proved that the difference between fortune and failure isn't intellect, it's alignment. When the market proves your thesis, press it. When it doesn't, fold it. The hidden rule lives in that simple exchange. Now that we've unfolded his principle, the next step is to bring it into our own time, into screens, volatility, and noise. We'll translate his rhythm into modern habits: how to detect confirmation in real-time data, how to manage risk in an algorithmic environment, and how to embody Livermore's patience in a world that despises waiting. How it applies to modern traders in today's markets, Livermore's rule is more relevant than ever. Though the battlefield looks nothing like his ticker tape room, we trade in an ecosystem of flashing algorithms, news bots, and infinite distraction. But human behavior, the raw material of every price movement, hasn't changed. Traders still chase, fear, hesitate, and rationalize. The only difference is speed. The impulses that once took days to ripple through the crowd now take seconds. Yet Livermore's rule still cuts through the noise. Act only when the market proves your suspicion. The modern trader faces a new version of the same old temptations. Algorithms lure us into false momentum, influencers promote conviction without evidence, and social media floods our attention with instant opinions. The more information we consume, the less patience we cultivate. Livermore would have seen this as an epidemic of distraction. His advantage came from solitude, from the ability to separate signal from story. In modern terms, that means filtering not through more data, but through better questions. One adaptation of his rule I use is what I call digital tape reading. Instead of watching the ticker, I watch order flow, reaction to catalyst, and structural behavior around key levels. When the market should break and doesn't, that's information. When it should accelerate but stalls, that's also information. Every contradiction between expectation and behavior is a potential pivot. Livermore built fortunes by noticing those contradictions, not by predicting them. The same process works on any time frame, 5 minutes or 5 weeks, because what matters is behavior, not duration. For instance, in today's environment of algorithmic liquidity hunts, false breakouts are everywhere. The average trader mistakes noise for intent, chasing every move that looks confirmed by a short-term spike. Livermore's rule immunizes you against that. He'd wait for the test after the breakout. Does price retest the level and hold, or collapse back below it? Modern traders can quantify that patience by waiting for confirmation in volume delta or volatility compression. Technology has changed, but patience remains analog. Another modern layer to his philosophy is risk scaling. Livermore pyramided manually. We can automate it. You can program your trading system to add only when new highs or lows are made, with improving volume efficiency, or when relative strength outpaces the index. Each condition is the digital echo of Livermore's test of confirmation. Automation doesn't replace judgment, it reinforces discipline. The point isn't to eliminate emotion, it's to trap it inside a structure that obeys rules. And yet, the deeper challenge isn't technical, it's psychological. Livermore's calm amid uncertainty is harder to emulate now because we are hyperconnected. We see every tick, every opinion, every fear. That visibility magnifies impatience. The hidden rule reminds us that silence is not absence. It's preparation, waiting through the noise, letting price do its slow work. That's how conviction is earned, not borrowed. In practical terms, applying his philosophy today means building habits that slow your reactions. Before each trade, I ask 3 questions. Has the market disproved the opposite of my thesis? Does price behavior align with what strong hands would do? If I weren't in this trade, would I still want to be after seeing today's action? If I can't answer all 3 with clarity, I wait. That's modern tape reading. The edge isn't being faster than machines. It's being calmer than humans. Livermore's wisdom also extends to portfolio management. Diversification for him wasn't owning many things. It was owning only what proved itself. In a digital market, that means pruning, constantly cutting exposure to mediocrity so you have room for conviction. Modern traders often hold too many positions out of fear of missing out. Livermore would have called that mental clutter. The hidden rule demands concentration, a few trades, perfectly aligned, held through turbulence until behavior says otherwise. His timeless truth is that markets reward those who think probabilistically but act decisively. Algorithms can simulate logic, but they can't feel fear. Humans can, and that's precisely why the emotional mastery Livermore preached of waiting, observing, and reacting only when proven right still defines the difference between surviving and thriving. As we move toward implementation, I'll break this philosophy down into actionable steps: how to structure your trading day, how to test setups the Livermore way, and how to cultivate that internal stillness that keeps you from trading every heartbeat. The next section will map these ideas into a practical daily process, the blueprint for turning observation into disciplined execution. Turning Livermore's philosophy into daily practice means designing a structure that removes randomness from your behavior. The rule trade only when the market proves your suspicion can sound abstract until you translate it into routine. What follows isn't theory. It's a framework that combines his discipline with modern precision. The first step is preparation before exposure. Livermore studied his stocks long before he traded them. In our terms, that means curating a focused watch list rather than reacting to trends of the day. Each candidate should have context, a clear technical structure, a historical rhythm, and a reason the crowd might misinterpret its behavior. Before the market opens, identify your pivotal points, levels where proof can occur. This isn't prediction, it's readiness. You are marking the courtroom where the market will testify. The second step is proof through behavior. Once the session begins, your task is not to act, but to observe. Watch how price reacts to news, to volume spikes, to index swings. Livermore looked for what he called unusual behavior under ordinary circumstances. In modern trading, that might mean a stock holding firm during a sector-wide dip or building tight structure after bad headlines. Those moments signal accumulation or distribution, the footprints of professionals. Only when the market's reaction contradicts expectation do you prepare to engage. The third step is entry through confirmation. When proof emerges, when price clears the pivotal level with conviction, or when a breakdown fails and reverses sharply, you take a small, precise position. This is your test probe. Your goal isn't to hit it big, but to test whether the line of least resistance has truly shifted. Set a predefined stop at the level that would invalidate that thesis. Livermore's first loss was the best loss because it protected clarity. Step 4 is validation through time. The moment after entry is critical. Livermore expected to be right quickly, not eventually. If the move hesitates or reverses without reason, you exit. Time is information. A trade that stagnates erodes edge even if it hasn't hit your stop. But if it behaves correctly, following through with volume harmony and controlled volatility, you upgrade conviction. That's when you consider scaling. Step 5 is pyramiding through evidence. Add only from strength. Each new unit must make the prior one safer, never more vulnerable. That means placing ads at breakout confirmations or after constructive pullbacks, not randomly. This compounding effect turns a correct read into geometric growth. Livermore's biggest profits came from a few campaigns, where the market kept rewarding his obedience to trend. Step 6 is defense through disconfirmation. Continuously test your assumptions. If the market starts to act differently, heavy volume reversals, failed follow-throughs, increasing volatility without progress, reduce exposure. Never argue with evidence. The same proof that earned your entry must also justify your stay. Livermore would liquidate entirely when the tape contradicted him, no matter the unrealized gain. Step 7 is reflection through journaling. Livermore's greatest insights came from reviewing past trades, especially the ones he exited too soon or held too long. After every campaign, document the sequence: entry reason, behavior proof, emotional state, exit rationale. Over time, you'll see your own version of the hidden rule emerge, patterns of how you personally respond to proof and disproof. Step 8 is discipline through limitation. Restrict the number of open trades. Focus magnifies intuition. Dilution destroys it. Livermore concentrated capital where conviction met evidence. In the digital era, this means fewer windows, fewer alerts, and deeper engagement with structure. Step 9 is patience through detachment. Between trades, resist the urge to manufacture action. Neutrality is a position. Livermore's wealth came not from constant participation, but from selective precision. Detachment isn't laziness, it's risk management for your psychology. Finally, step 10 is alignment through adaptation. Markets evolve, but human behavior doesn't. The hidden rule isn't a script. It's a mirror. Revisit it often. Ask whether your actions reflect its spirit. Are you reacting to behavior or to boredom? Are you aligning with flow or anticipating out of fear? When practiced, these steps create a rhythm of observation, confirmation, expansion, and protection. They turn the hidden rule into muscle memory. The hardest part isn't learning the sequence, it's obeying it when emotion wants shortcuts. That obedience is where Livermore lived most of his brilliance. In the final section, I'll bring everything full circle to cinematic close, where Livermore's timeless psychology meets the modern trader's reality. It's about how to live with uncertainty, not as punishment, but as proof you're in the right arena. Cinematic conclusion plus comment invitation plus emotional sign-off. I come back to the screen. The way a sailor returns to the shore, grateful, humbled, and already listening for the tide. Everything we've walked through, the paradox, the trap, the pivot, the patience, the proof converges into a single posture. I do not need to know what happens next. I need to recognize who is in control now and align with it. That is the current under every candle. That is the rule that never ages. When I sit down to trade, I frame the market as a living conversation. The crowd shouts. The tape whispers. The crowd wants headlines. The tape wants behavior. Livermore learned to love the whisper. He taught himself to sit through the noise long enough for intention to reveal itself in action. It's not heroic. It's not romantic. It's the opposite. It's ordinary attention practice with extraordinary consistency. The more I practice it, the less I chase the mirage of certainty, and the more I cultivate the quiet certainty of process. I think about the campaigns that changed me. None of them felt obvious in real time. They were born in ambiguity, tested in boredom, and paid in patience. I never called the top or nailed the bottom. I simply recognized when resistance stopped resisting, when support stopped supporting, and when time itself switched sides. I followed, and when I couldn't follow, when I was wrong, late, or stubborn, I cut and stepped away. Because survival is the only door that leads back to opportunity. Livermore's real audacity wasn't in size. It was in the humility to reset. There's a stillness available in this craft if I choose it. A morning can be spent drawing levels, rehearsing the event of pivotal points, and then refusing to touch the keyboard until the market speaks in its native tongue. That refusal is not laziness. It's discipline. It protects my best trades from my worst habits. And when the moment finally arrives, when a stock shrugs off bad news, or when a range breaks and retest cleanly, my job is simple. Take the test, read the reaction, and let the winner pay for my courage. I won't pretend the emotions vanish. They don't. Fear shows up in the stall, greed shows up in the surge, and pride shows up everywhere. But the rule gives me a place to put them. Fear becomes a trailing stop, greed becomes a scaling plan, pride becomes a post-trade journal entry. Nothing is suppressed. Everything is organized. That's how people stay in this game long enough to grow wise instead of merely tired. If you strip away the legends and the lore, Livermore left us a human blueprint. Be early in preparation, be timely in confirmation, be relentless in discipline, be merciless with denial, be generous with winners. Let the first loss purchase clarity. Let the second unit be financed by progress, not by hope. Let boredom be the tax you pay for participating only when it matters. And let exits be a normal sentence in the grammar of survival, not an admission of failure. So here is how I close the loop each day. I ask, did I demand proof? Or did I demand comfort? Did I let the river carry me? Or did I try to dam it with opinions? Did I cut when time contradicted me? Or did I wait for pain to convince me? If I can answer those with honesty, tomorrow's process writes itself. The market doesn't owe me trends, but it will always offer behavior. That is enough. I'm leaving you with a simple rehearsal you can run before the bell. Name your pivotal points. Define the behavior that counts as proof. Pre-write the words that will get you out when proof disappears. And promise yourself you will do nothing in between. You'll be surprised how much easier conviction feels when you stop renting it from strangers and start earning it from price. And if you remember nothing else from our time together, remember this line I tell myself when the screen blurs and the ego grows loud. I am not here to be first. I am here to be aligned. I want to hear your voice in this, because your version of the hidden rule will be shaped by your temperament, time frame, and tolerance. What part of this spoke to you most? The patience through boredom, the ad from strength, discipline, or the willingness to let time be your judge? Share your takeaways or your hardest lesson in the comments. Tell me where you hesitate, where you press, where you plan to change. Your story makes this more than a monologue. It turns it into a room where traders learn from the same river. I'll see you at the next pivot, listening for the same whisper Livermore heard a century ago. Until then, protect your capital, guard your attention, and let the market earn your conviction tick by tick, test by test, proof by proof.